Good afternoon and welcome to 3C's 2022 to this very exciting panel, which we hope to be very exciting, on solutions to de-risking of correspondent banking relationships. I say solutions because we will be entirely focused on solutions. A lot has been said about causes and drivers of de-risking, but this power panel I have with me of experts, we will explore solutions. Let me start by introducing them. Wendy Delmar is the CEO of the Caribbean Association of Banks. Beth Felix is the CEO of Palmera Consulting. And Theresa is from the U.S. Department of the Treasury. She's the policy advisor from the Office of Terrorist Financing and Financial Crimes. I welcome them to the panel today, and I welcome you, the audience, from over 1,100 countries, over 46 countries. We have over 1,100 persons online. Thank you all very much for joining us today. We're going to have a very free-flowing and interactive discussion around de-risking and solutions in particular. This is not going to be a panel where we're going to be able to cover all of the possible solutions, but I can promise you we'll cover quite a number in depth. To give you a flavor of what we mean by solutions to de-risking, and also the fact that during the course of our discussions, you'll understand the importance of de-risking. Correspondent banking relationships form part of the lifeblood of the financial ecosystem, the global ecosystem, and for us in the Caribbean, a vital part of our ecosystem. You couldn't, for instance, send $1 to grandma or grandpa, nor could grandma or grandpa send you $1 using the global financial system without there being some interaction with a correspondent bank if you lived in two different countries, for instance. That's a very simple way to look at it. Without that ability to convey financing in that way around the world, businesses would not work. They would not be able to purchase. They would not also be able to export and receive payments. At the global level, at the regional level, at the national level, and at the individual level, correspondent banking relationships matter. But when those relationships are severed, cut, throttled, or restricted for reasons other than the fact that the persons who manage those relationships, called the correspondent banks, are unable to mitigate and manage the risk appropriately, we call it de-risking. De-risking is not only severing or terminating of those relationships, it can also be, as I mentioned, throttling. So the solutions that have arisen over the last 7 years, 8 years or so, I can share some of them with you before we start our discussion. One of the first, or rather I should mention that the Caribbean Association of Banks, that's why we're honored to have Wendy here, was the first regional organization to raise the alarm about de-risking in 2015 and its impact on banks. In 2016, CDB published a paper that looked at solutions. And some of the solutions that we looked at were regional high-level diplomacy, a regional or national centralized information database or information sharing hub, a centralized regional transaction hub, having new guidance from the Financial Action Task Force, new KYC or Know Your Customer utilities, using insurance, using blockchain and other digital technologies, lobbying for a change in liquidity coverage ratio, for instance, using a US-based presence through a Caribbean-owned bank or clearing institution, doing roadshows to meet US regulators, managing contractual clauses, establishing correspondent banks at parent level, establishing correspondent banking relationships through second and third tier correspondent banks, consolidating national transactional traffic through a few major banks, and consolidating even the regional banking industry. Those were some of the 20 solutions. More recently, the Atlantic Council early this year also made some suggestions that you'll hear us talk about, using a regional mechanism to increase transaction volumes and categorizing correspondent banking as critical market infrastructure. There was also the U.S. Caribbean roundtable earlier this year in April that looked at a number of things as well, including using congressional hearings and looking at a consortium banking model, where, as I mentioned earlier, we can have a U.S. presence. And that's where I'd like to start. Because Wendy, you had the opportunity to deliver before the U.S. Congress earlier this year a statement on the status of correspondent banking relationships in the region and solutions, especially you touched on. And part of that congressional hearing was one of the things discussed or initiatives discussed at the regional level in that U.S. Caribbean consortium, U.S. Caribbean roundtable. Sorry, tell us, where does the Caribbean Association of Banks stand in relation to finding solutions to de-risking? And in particular, which of those solutions do you find either most challenging or most promising?
Thank you so much. It is definitely an honor and a pleasure to be able to speak on this issue again. I think that we are, seeing that there is significant traction in a conversation that, like you said, has started for the past 7 or 8 years. As far as the severity of de-risking, while we have seen the issue to a large extent plateauing, we see that it continues to be an issue for banks within the region. As recently as last week, and I'll share as we go, one of our members would have faced another scenario of de-risking, and this is one of our larger members dealing with one of the more prominent correspondent banks who's been dealing with the region for quite some time. So the issue of solutions, it is a significant one for us at this point. You would have mentioned a number of the factors that we continue to focus in on as perhaps low-hanging fruit, those that we believe can have almost immediate impact to the situation at hand. The first of course, coming out of that is diplomacy and diplomatic discussions around the issue of de-risking. And of course, my participation in that discussion on Congress with Congress recently. Some of the areas that we have focused on that we believe, again, we can immediately impact would be the INCSAR report, for example, the opportunity provided to the regions who are significantly impacted by de-risking to have input into what is being fed into that report on an annual basis. We have seen that there has been an act which has been presented by Congress, specifically Maxine Waters, to address the issue of the INCSAR report, noting that the feedback that we've received is oftentimes the publication may have erroneous information, completely erroneous. There are issues or errors around some of the content. And so one of the solutions around the INCSAR report is that we have to take responsibility and the ownership and accountability for what is reported within our jurisdictions. So I see that as one of the most immediate that we can manage as a region and as individual islands. The other, of course, is pooling resources. That is to address the issue of volumes. We've heard time and time again that the correspondent banks indicate that because of the size of the region and the number of transactions, the volume of transactions that are being flowed through them, there are significant costs attached to that. And so we believe that one of the opportunities for us is determining how do we best pool resources through perhaps a regional control system that would allow us to, one, have the opportunity to negotiate, but more importantly, to be able to drive those volumes up. The other, of course, is what I term as a humanitarian good or critical infrastructure, as you would have alluded to, and also foreborne by the Atlantic Council. How do we determine that the provision of these services to the region, which is so heavily tourist reliant, is seen as something that must be provided in order for us to simply survive? Financial inclusivity at its best. So those are the areas that we believe are easily targeted. Perhaps, it sounds easy, but it isn't, because we do have to bear in mind that while we see these as solutions, we have the opportunity to review this from the correspondent banking side. Again, I think as we go through our discussions today, we would speak a little bit more to some of the challenges that they are beginning to indicate from their perspective, which is perhaps going to be, another area that we have to look at in determining the best way forward.
Thank you very much, Wendy. Theresa, I'll come to you now, because the US has historically, certainly since we've begun looking at solutions to correspondent banking, but also having to deal with what persons have termed as drivers and causes, pointed many, many fingers at the US government for not doing anything, US regulators for burdening banks with the requirements that may lead to de-risking, US banks for not taking the right steps, etc. But you have a really good story to tell, I think, because one of the things that I believe us in the region we don't realize sufficiently is that there is no or very few solutions that we can come to that will enable us to do it ourselves. And the U.S. as a whole, in particular the U.S. government, in more particular, Department of Treasury, has been doing some work that I believe we need to know about, because it feeds right into the solutions focus that we're having. And more importantly, that will have implications for the economic development of the Caribbean. So please share with us what exactly you've been working on in this area. I'm sorry, Theresa, your microphone is off.
Of course. Thank you. Thank you for giving me the opportunity to speak today. Congress has mandated the U.S. Department of the Treasury to study de-risking and the adverse consequences of de-risking through the AML Act of 2020, and specifically Section 6215. We conducted a number of public and private sector stakeholder consultations and reviewed the Bank Secrecy Act regulations and examination standards in order to assess their impact on de-risking. Our outreach has included, as I stated, a number of public and private sector stakeholders, including U.S. departments and offices across Treasury, various financial institutions and nonprofit organizations generally. Our starting point included reviewing a series of GAO de-risking analysis reports that culminated into a summary report published in December of 2021. And the GAO report considered the challenges related to de-risking and some proposals as well. We are looking at all of these aspects and more to better understand the scope of the challenges, de-risking drivers, and a broad range of policy and regulatory mitigation measures that could be considered to mitigate the adverse effects of de-risking. And Treasury is considering the adverse consequences of financial institution de-risking entire categories of customers, with an interest in understanding why financial institutions are engaging in de-risking. The report will consider the most appropriate ways to promote financial inclusion and maintain international anti-money laundering, standards as well.
Thank you very much for that. I think your work is critically important to how we proceed, and how we proceed, at least in our case at the CDB level and in Wendy's case at CAB's level, are really sort of high level. But Sarah Beth has been at the ground level, a warrior across many different aspects of EML CFT in the region and outside of the region. She's an expert in her own right on so many of these areas. And Sarah, I'd like you to tell our audience, please, what are some of the things that you've been seeing as it relates to solutions? And when we talk about solutions, we mean across the board. In particular, those that might be practical, feasible, workable, and your own ideas about how we should approach the search for solutions.
Yeah, I think from my perspective as an AML practitioner in the U.S., I've been in this field for 21 years, and all of the papers I've read, especially the one from CDB, out of the 16 causes, 95% of them are somehow linked to AML risk, right, or sanctions risk. And it's a push-pull for me because I am a reader and an applier of FAT reports. Mm-hmm. So when I see that the FATF in our U.S. mutual valuation, we don't get dinged as hard as some other nations in some areas, that kind of, my sense of justice is like, full bore ahead on that. And so I feel like there are some areas where I think the FATF can probably add additional factors that that kind of give credit where credit's due. I think one of the biggest ones has to do with beneficial ownership. The U.S. was 6 years late to the party for that one, right? And so while it did come up on our mutual evaluations, I feel like there needs to be more credit when U.S. banks are looking at being a correspondent bank for a bank from the region. Most of the countries represented by the CAB have been far ahead, sometimes 5 years ahead of the U.S. in implementing some of these FATF regulations. And I feel like that's not properly communicated. So I think one of the biggest things that I would like, and I'm just going to whiteboard some ideas here because,
Sure. Go right ahead.
I am just trying to see who is going to say that this one has legs. But one of the things I think that would be very helpful and that would kind of meet some of the underlying questions that don't really have a question yet. They're just kind of like an uncomfortable feeling for a lot of institutions, is the effectiveness quota, right? And this is something that every global, supranational, and national bodies have opined. What is effectiveness? I don't care what the end definition is. I feel like the indicators of effectiveness really should be where our focus is. And I think if we can extract those and come up with what are key indicators of effectiveness beyond what the FATF has rated, because I feel like those aren't detailed enough. They aren't in the nitty gritty enough for us to extrapolate what a true effectiveness rating would look like. And a great kind of real life example of this is the Wolfsburg CBDDQ, right? This is a standard thing. I'm sure most of your banks, Wendy, have been asked to fill this out. It's quite lengthy. You need a full-time employee to answer all these questions. So I'm not saying it should be reduced. I'm just saying I feel like we can get to the heart of the matter, which is the main reason for de-risking, by asking better questions, like some questions that lead you to effectiveness. Instead of asking, do you have policies and procedures for this? Check. It should be, what are the results of your policies and procedures? An example of this would be for CDD and high-risk customers. Instead of asking, do you have policies and procedures for this? How many high-risk customers do you have for each of these buckets that we've predetermined? Those are all good questions, but I think the better question is, how many SARs, how many STRs have come out of your effort to properly manage your high-risk customers? To me, that speaks to the heart of effectiveness, and it answers those questions that people don't really know how to form when it comes to these risks. The risks are real and present, right? I mean, I'm not saying that AML risk is not present in the region or anywhere else in the world, but I think there's better ways to ask questions. And so I think for me, trying to figure out a more effective use of time for those CBDDQs would probably benefit some of the banks in the region, because they would actually be able to show their chops, right? They'd be like, heck
Absolutely.
yeah, we have been in compliance with beneficial ownership for 6 years, longer than you have, right? I mean, but say it in a nice way, right? I mean, you don't want to poke someone in the eye, but
yeah.
I think that's probably something that we can do simultaneously. And a lot of, I actually submitted the ANPRM beginning or last year that the US put out advanced notice of proposed rulemaking for effectiveness. And I submitted indicators of effectiveness, because everyone and their mom has this definition of effectiveness, which doesn't help the AML officer that has to sign off on this. Yeah. That AML officer is wanting to know, what's your net effect of all of these efforts, of all these documents, of all these forms, of all the alerts, of all the dispositions and everything else? What's your net effect in these key areas? So I think having indicators of effectiveness, having that focus will help. I think that can be done in tandem with what we had talked about the other day, which was an FBO, foreign banking organization in the U.S.
Tell us about that.
So,
and your ideas,
Wendy, if this is something that you've looked at, I mean, I am sure, but it aligns with one of the solutions that you presented in your paper in 2016, which is a US-based presence financial institution of some sort. I think you used the term clearing agency or something, if I remember correctly.
It could be anything. It could be one that is purchased or that is created from scratch. But
yes, and I think with an FBO, you can actually purchase a bank, or you can stand up your own bank. And there are many FBOs in the U.S. Several of them are your generic, consumer commercial bank. Then several of them are actually targeted, and they only deal with certain products or services. And I feel like to meet this and to hedge against the risk of this happening again in the future, when we have additional AML rules and changes and things that come out, having a narrow focused bank and in FBO in the US that deals only with the region and only provides correspondent banking services, to me, is something that will kind of cure all of the issues that we know and the underlying questions and issues that people haven't put words to yet. Now, I do know in your paper you listed some cons to the to that idea. Go ahead.
Yes, I did. I think the what you mentioned and what I want to explore with Wendy as well as Theresa, if she wants to join in, a federal banking organization, as you mentioned, would definitely provide that type of opportunity. And I think you're quite correct in establishing that as a priority solution, because that is something that can really cut to the heart of what we're trying to create. The cons I mentioned in the paper, I just mentioned some of them very, very quickly, is the time it would take and the operational costs that would be involved in being able to establish that. And then when the pipeline is established, the fact that the pipeline can also be will need to be subject to consolidated supervision, which may also make it a bigger target for de-risking. There is also the possibility of the risk of time, in terms of how long it could possibly take for it to be established. But it is a very worthy solution, and it still continues today. The reason why I want to tie what Theresa is saying, what Theresa mentioned as well, is because at a general level, there would have to be very much an acceptance from the U.S. legislative and regulatory side as to how that can be accommodated in the current infrastructure. And from Wendy, I want to ask you about this, and if you and Sarah can also comment on this. What do you think is the feasibility of that proposal, and how do you think it would carry over in the context of your association and the work that you do in the region?
Yeah, absolutely. It is something that we have also been considering whether or not, and that is with the support of Maxine Waters, because she is actually requesting that we begin to do a feasibility study to determine whether or not this is something that can address the issue. From my standpoint, there are a couple of things that would have to be taken into consideration. While I think it is certainly something that has to be explored, we also have to look at concentration risk, given the fact that all of the transactions within the region, or the majority of, would still have to be going through this one institution. To your point, Toussant, should this institution be de-risked, what is the impact going to be on the region? So we've also taken a slightly different approach to exploring whether or not a regional entity can become, I say aggregator loosely, the aggregator of those transactions for processing. So say, for example, should the CDB determine that they are interested in becoming part of the solution, whether or not they have the framework already existing to permit them to act in this sort of way, where they will actually become a transactor of sorts for the region now. And again, the question of concentration risk is going to be a factor. But also the question begs, will the regulators and the Fed see this as opportunistic for the region, or will they see additional issues? One, what are the considerations that the Fed would need to take into consideration or take into account in legislating for this entity to operate differently? Two, is it going to become a situation then where, if I'm a correspondent bank who knows that this entity has, I don't want to say favors, but for the purposes of this discussion, the favor of the Fed in processing these transactions, does it mean then that I will take a more relaxed position to validating transactions? And again, it points to what happens should a transaction pass through the system that really shouldn't, right? So we do need to take these things into consideration. However, at this stage, these are very topical to the conversation of solution. And so let me just throw one other in there and say, perhaps the opportunity has been technology. Is technology going to become the savior that everyone is touting at this stage? That we need to find a way. Yes, Sarah, I saw that. But then also we have to be very, very careful in producing that as an option, because it is going to mean that certain transactions can be processed while others would still need to be processed through a correspondent banking relationship. And so what the likelihood is that we are actually going to dilute the volume of transactions that are going through the correspondent banks. And so the impact is possibly going to be higher costs associated with correspondent banking relationships, but also we may see further de-risking because, again, the net volume will be decreased. So what does that leave us? Is it that we have to look at more consolidations? And I throw that out to the panel. Is it that consolidations of banking, I think Toussant alluded to it in his opening, that perhaps we need to look at just a few large banks doing banking in the region as opposed to the number of banks that we currently see per populace?
Brilliant. I like that idea because consolidation can be looked at from about 3 or 4 areas. Consolidation of banks, should that be organically driven by the market forces, the larger, bigger, stronger, more robust banks buying the smaller, weaker ones? Or should it be driven by regulation? Should it be driven by, and by regulation, I mean the regulators taking an active role and say, maybe we have too many banks, the smaller ones will die off, so let's strengthen the pack? Or should it happen as part of a way of responding specifically to the risk and threats? I think you can look at it that way. You can also look at consolidation in the context of transactions, like we spoke about. You can look at consolidation in terms of information flows, so that it creates an easier basin or bowl or repository of information for U.S. banks and regulators to have. You look at it across that way. I just want to ask Theresa, are you looking in your work at the prospect of a U.S. established institution? I know your work is not limited to the Caribbean, it's global, but are you looking at all at the establishment of a regional institution or any type of consolidation?
So I can't really comment about what we're specifically looking at. I think I just really can't comment on that.
No problem, and that's quite understood. I want to come to Sarah then, because I know you're gonna have something to say about this. The whole idea, Wendy touched on the idea, do we then segue to technology? Or do we also look at how, even if we establish an institution like that, how it would be able to respond to a couple of things? Wendy mentioned a de-risking event. There could also be the risk of taint. What if there's, consolidation of traffic through this one entity or organization, but, one stream of traffic or a sector of transactions are deemed higher risk? And what if there is then a throttling as a result on that one bank? How do you see the response from a solutions perspective? How can we work through it as a region or as individual banks at the institutional level or even at the national level to be able to make those things happen? Like, can that happen? Say one country even say, let's establish our bank and we get all of our national banks through this bank, or is it something that requires a regional response, and how do we work through some of those challenges? And you can use the opportunity as well, to segue into other solutions that we're talking about.
Yeah.
Like the legislation and so on. Go ahead.
So I think for me, the way that I envision it, and this is a very simple form, is that this FBO in the US, their only clients, their only job is to bank Bank of Antigua, right? Their only job is to bank the credit union in Barbuda, right? That is their only job. And with that narrow focus, you can really, they would have to have an AML team. They would have to have a sanctions team, just like any other FBO in the US. But when you have this specialized group, specialized resources, really, because you're not doing consumer loans in the US, right? You'll be involved in maybe some letters of credit for these institutions. You'll be involved in payment clearing, maybe some cash letters, right? There's some other limited areas, but when you're dealing with a problem that is mainly tied to AML, the best fix for it is to specialize in AML, right? Mm-hmm. There is no way around it. And so I was looking at like the grants that the World Bank and the IMF have given out. And I know Wendy talked about this critical infrastructure. I was looking at some of these grant dollar amounts the other day on the World Bank, and I'm like, dang, that would be a great FBO, and that would hire a nice AML and sanctions team, right? And that would cure a lot of things. Again, very simplistic type of solution, but I feel like there are ways in which we can offset one of the cons of setting up an FBO. And that is because both the IMF and World Bank have talked about this being a humanitarian issue. You know,
Right.
I think 2016 was the first time I saw a paper that they published on this. So if it is a humanitarian issue, like they say it is, and like we all know it is, then why aren't we saying, hey, can you give us a grant to set up this FBO? We will staff it, you know, appropriately for those risks, so they can monitor directly that correspondent banking relationship. I think when I hear the word consortium, or kind of, you know, having it all be in one bank in one country and then flowing through to the US, I think risk.
Yeah.
As soon as I hear this bucket of data that the stuff kind of swims around in, I'm like, whoa. I mean, it just makes me cringe from an AML and sanctions perspective, only because no core system is the same. Even if they're on the same core, the way that they've set up the core captures data differently, right? And data is really where AML and sanctions compliance is going to live or die. And so because so many of the causes for de-risking are tied to AML and sanctions, it's about getting it right? Setting up an FBO, having no other intermediary, right? Dealing directly with that bank or that credit union in the region, and treating them just like all of the guidance, right? There's global guidance about how to do that. So that was kind of very simple, I know.
Yeah.
But
No, but Sarah, if I can,
That's great. Go ahead,
through
Wendy.
you, one
Go
of the thought processes that guides the determination of exploring whether or not there can be an aggregator or a pooling of resources nationally is exactly that. Depending on who or which entity is determined to be the aggregator, it means then that they must be reputed by the US Fed. They must have a strong financial background, but they must also have a centralized way of collecting the data, so that it allows for this institution to also be able to trend and determine what weaknesses exist, and train up, skill up the institutions or the entities accordingly before the transactions get to the US and there is a determination that there may be a lack of compliance or an issue within a particular jurisdiction or with a particular institution. So I think that also speaks to the opportunity that may present itself through a national pooling of resources, national pooling of information. And it also further addresses the issue of data, which is a massive issue within the Caribbean, where we simply are unable to present the responses and the solutions that we need to our clientele, because we have not been able to determine how best to collate and also to disaggregate information or data on our client bases, so that we can also grow positively.
Absolutely. I mean, I like how this is shaping up, because one of the things we're going to talk about right at the end in the takeaways, I'm going to telegraph it now, is how perhaps there may be a need to string solutions together. And I think what you just heard from all three of our presenters so far is actually that, even though they might not have said it. We couldn't possibly have a solution that involves establishing a US consortium or by acquisition or organic creation without being able to have the regulatory environment in the US be receptive to it, the legislative environment in the US being able to be receptive to it, us having our compliance in order, as well as ensuring that there's adequate opportunity for provision of accurate and credible information. When a US correspondent bank makes an RFI, a request for information, they expect to have an answer or a response that is credible and that is reliable. And if they don't, that could be a driver of de-risking. How do you solve that? By creating a repository for that type of information that can be vetted and checked. And what I like about what I heard, though, in relation to what Sarah said, and I think this is why this panel is so important as we look at solutions, is how do we fund this thing? Because that institution also has to be capitalized. So how do we fund it? Could we, if we think about it as a humanitarian issue for the region, some called it back in 2016 an existential threat to the region, then why don't we use some development funding? And this is why we created this particular panel, because we're talking here about how solutions to de-risking are important to the economic development of the Caribbean. And so I really like that. I want to mention that we have some questions in the panel. We have about 6 questions in the panel in the last tab. And one of them is, what if no solutions are found? right? And for us, that is, Wendy, coming back to you now, that's inconceivable, is it?
Absolutely. Toussant, to your opening statement, the provision of correspondent banking is tantamount to the air that we breathe because of the necessity to trade. The majority of the islands who are significantly impacted are tourist-based. And so if we were to look at Belize, for example, as an absolute worst case scenario, Belize lost all of their correspondent banks as one of the first regions to be de-risked. Not only were institutions de-risked, the island, the country was de-risked, including its central banks. Meaning, say, for example, a cruise ship comes into your port and your tourists are unable to swipe their credit cards to do a basic purchase. So if you would imagine that, that is why a solution is tantamount to our survival as a Caribbean people.
Absolutely. Theresa, how important is it? This is just a general question, not indirectly related to your work, but how important is it? Could you say how important is it for the U.S. as a whole and Department of Treasury where you work to be seen as, part of the fight against de-risking as a whole, and in particular, or more generally, financial exclusion, or to reverse it, be seen as promoting financial inclusion?
So I think it's part of Section 6215 really, and the aim for the report to look at financial inclusion as important. And I also know that that this is clearly a prioritization, like it's an issue that we are looking at, and it's been prioritized significantly. So don't know if that answers your question fully, but
It does. It does. I think the fact that you mentioned that you're telling us that it's essentially already in legislation in 6215, that's already been operationalized in the work that you do. I think that's important because what we have found in the region is that at the back end, there's always the risk of a blame game. And no one really knows that it's equally important, or very few recognize it's equally important for the US to be promoting financial inclusion. Not only the US, but other large countries and funders of development programs in the US want to be able to have not only their own funding be able to reach intended beneficiaries and recipients, but more importantly, be seen as supporting the region's financial ecosystem, as Wendy had eloquently put it. Sarah, I want to come to you in relation to what it would mean from a solutions perspective, because you touched on the need to have, which I think is really, really important, the need to ask the right questions. And this is one of the solutions we looked at back in 2016 in terms of having the FATF provide better guidance, right? Guidance to national governments and regulators about how they should go about not only that effectiveness assessment, but more importantly, respond to de-risking. How has that been, and how do you see that as a possible solution in terms of how do we move from them being able to do that, which is provide better guidance, and then into ensuring that the financial structure, the regulatory structure, and then the banks as well are able to take that? Does it require more legislation, for instance, more or less regulation, or is it simply an institutional thing that can happen as a result of that? Where do you see that particular solution going?
Oh, I mean, I definitely don't think we need more regulation. I think it gets, and apologies to any attorneys, but it gets super lawyerized, right? Which isn't a bad thing. But when you want to distill it so somebody can actually operationalize the risk, the last thing you want is another high level definition of effectiveness, right? And that's where I think shifting it to that indicators of effectiveness, which is a term that I came up with. I mean, it's not anything super unique. I think from an AML perspective, you need to give people that first glimpse of what it looks like to apply that effectiveness standard. And I think that comes through the indicators of effectiveness. I'm hoping that when FinCEN comes out with that they include that type of language. I offered it freely to them. I don't know if they'll include it. But I think as far as how that can impact what is happening today, and I kind of talked about this in 2016, 17 down in down in Antigua for a AML conference. And it was basically like talking to a whole bunch of banks from the region and telling them, you are doing far better in a lot of areas than US banks are. But you have to say that to them, right? Because they aren't going to ask you that question. So I think providing that information in an effectiveness, right? These are the, right? So here's the questions that you asked for. Here's my CBDDQ, and I filled out all the things. But this is really the stuff that matters. This is how many SARs and STRs we filed. This is what the effectiveness is of this process, of this program that's critical, right? Which is the EDD program, high risk customer management program. You asked me all these quantification numbers, but I'm going to give you what you want. But also I'm going to give you more than what you asked for, because I want you to feel comfortable that we're not just giving you high level processes and procedures and yes and no's and numbers. And that's where, like, I really feel like a lot of the banks in the region, they're rock stars when it comes to AML and sanctions in a lot of ways. And I feel like that's not portrayed correctly because the question isn't asked correctly.
Absolutely. And I think that's the point Wendy made earlier as well about the INCSA as a solution. How do we treat with the INCSA report that says nothing good about our region, the countries in our region and the AML infrastructure, and they didn't previously have an opportunity to respond to the INCSA before before it was published, which the Narcotics Control Report, it also has AML review from the U.S. perspective, intelligence perspective on not only countries in the Caribbean, but also other countries outside the region. Thank you for that. I want to come back to something Wendy mentioned earlier and something we have looked at from a solutions perspective, which is that perhaps a horses for courses approach needs to be taken, in that what may be the problem in Dominica may not necessarily be the problem in Trinidad and Tobago, may not necessarily be the problem in Guyana, may not necessarily be the problem in St. Lucia. And therefore, each country can look at what those solutions can do for them and frame solutions at the national and organizational level to treat with them. And one of the things you mentioned as well that I think it's important in how we look at this is, how do we even, you mentioned, no need for any more regulation, and apologies to the lawyers. Unfortunately, I'm an attorney, but I don't hold that against you. What I would say in terms of one of the suggestions we made, and I'm coming to Wendy on this, is look, from a legislative perspective, it'll be great if perhaps there can be some legislative or regulatory support for how banks exit. Back in 2015, the big problem was they were exiting, correspondent banks were exiting without much notice to individual banks. One of the questions we have in the chat is, why is correspondent banking critical to the global financial system and for the Caribbean in particular? Wendy has answered that question already, but this is why it's important. If you sever something that's important that quickly and that swiftly, the consequences and the effects can be devastating, even unintended, and have a long fat tail. So one of the suggestions was, why don't we legislate that you couldn't possibly, or at least have a regulation that you couldn't possibly exit without a minimum period of notice, for instance, if it is critical. And Wendy, here's a question. One of the things in that context, and one of the reasons for pulling out on those bases, this suddenness and so on, was the idea that the relationship was no longer profitable.
Mm-hmm.
And as a result, the risk-reward ratio was imbalanced, and the banks felt it was justified before they hit their next quarter to get rid of a Caribbean bank or to throttle transactions. How is that playing in from the solutions perspective in the context of being able to say the risk-reward ratio, we can respond to that? What solution or solutions do you think can respond to that? Or what kind of issues or challenges is that posing for your members?
Well, you referenced Toussant back in 2015-16 when de-risking reared its head, that the time frame for exiting relationships was very brief. That obtains today. Like I said at the head of the show, 30 days is what respondent banks are given as their time frame for finding new relationships. I reviewed a report issued by the World Bank recently, which stated that we had some respondent banks who were able to stand their ground and even perhaps take this matter further to the legislators and the courts to say this is simply unacceptable. And sometimes we do have to take a stand. However, what we are seeing emerging recently is correspondent banks are saying, I simply do not have the capacity to maintain this particular service to you anymore. So this proposes significant challenge to the respondent banks. As you know, if a bank says to you, I simply can't, I don't have the internal capacity anymore, or I don't have the framework because it's too expensive, or it's too arduous from a human resource or capital perspective, what then is a respondent bank to do? I do want to say, to Sarah's point, in terms of the significant works that the Caribbean banks have been doing in ensuring that AML is no longer the major issue, we have seen significant progress in that. So hats off to our Caribbean banks. We have had in recency approximately 4 of the long-standing correspondent banks who still do business in the region saying the issue really has very little to do with AML or compliance in the Caribbean, because our AML compliance processes and procedures are significant, right? To your point. So where this has been removed from the equation, it goes back to profitability for the correspondent banks, which ties us right back into the need to see this as a humanitarian good. There really is no other way to see this as a foundation of why this remains critically important. So let me answer that question again because it came back up. Let's take a look at the other factor that keeps Caribbean islands afloat, foreign direct investment. And I think there may be a question in there around environmental development and what is the impact.
Yes, I was going to come to it.
It ties in beautifully, because one of the things that we have consistently said is we see the movement of the goalposts. Every time the Caribbean has done, or an entity has done something that they believe would bring them back into good repute with a correspondent bank, that is cut off at the ankles and leaves the Caribbean or the indigenous banks scrambling to determine, okay, what do I need to do? And I think until we can have that level of transparency and honesty of discussion in terms of what is required to provide you the comfort that we can provide, it's never going to stop. I think at the end of the day, if we were to say that volume is the challenge, that is not an issue that the Caribbean can address. We are small island nations. We have fixed populations, right? St. Lucia, for example, 238 square miles. What can we do differently to drive the flows upward? Absolutely little. There are some countries who are going to fare well. For example, Guyana, with the discovery of oil. We are seeing correspondent banks are flocking to do business in the region. We have heard consolidation, mergers and acquisition, perhaps as an answer to the question of solution. But again, we are seeing yet another challenge where acquisitions have begun to bear fruit. And in some instances, we are still seeing the withdrawal of correspondent banks from the table. So again, it takes us back to what do we need to do to continue to survive as a people? Humanitarian good. This has to be seen as critical infrastructure for the region, because at every turn, addressing technology and automation and increased volumes through mergers and acquisitions and doing so much more and spending so much money on improving the AML response has borne little fruit. We have not seen the reattraction of business. However, I think that the advocacy for this, for correspondent banks to become part of the conversation, is one that is perhaps slow in moving, but it is a conversation that cannot stop. And so again, I thank Toussant and his team for bringing this back to the table.
Thank you very much.
Can I add something?
Yeah, sure. We have a question in the chat I was going to come to you on.
Oh, me?
It says, how should we as a region approach the challenge of profitability of correspondent banking in the region? That's the first part. The second part is, what role can fintech play to offset some of the downside risks in de-risking? That's the part I wanted to come to you on. So after you've added to what Wendy said, please treat with that.
Yeah.
And what are the issues related to fintech in this regard? And after you're done, I'm going to come to Theresa. I'm just lining this up now for you, Theresa, on what would be like what timeline are we looking at in relation to the report that we're so eagerly anticipating? So to you, Sarah, and then to Theresa.
So I think, Wendy was talking about how, the region is finally, kind of getting some credit for the amount of work that they've put in and taking AML, CTF, and sanctions efforts to the next level. But then she said about the profitability and working inside institutions, having client institutions, looking at their internal profitability statements for certain products and services. AML compliance is part of that, and it's a big part. It's the majority of the behind the scenes budget. So while a lot of US institutions may be saying, oh, no, we totally trust your AML efforts, behind the scenes, it's still a profitability issue for them, you know? So I think that kind of speaks to what Wendy said, but also the first question, the first part of this question here. I do not see AML and sanctions as separate from the profitability argument. I think it's an easy thing to hide behind. I think a lot of US institutions hide behind that. So I'm not calling anyone out. I just I think at the end of the day, the majority of the issue comes back to AML and sanctions risk, right? Not knowing your customer's customer, not being able to see through, right? Not being able to see that window through. As far as the fintech, I'm very opinionated on fintechs, as you remember.
That's why you're here.
Yes. So the US, I think, we are the main hub of fintech generation throughout the world. And I think it's because FinCEN provides 4 loopholes starting back in 2003 through 2018 that most fintechs can function under. From an AML perspective, it bothers, out of me. I mean, it bothers me. It is my hill that I will die on because those exemptions need to be revoked. We do have the Enablers Act that apparently, as of the other day, has bipartisan support through the upper chamber. I'm hoping that goes through. That'll bring some different new regulations to a host of fintech companies that are squarely functioning in those exemption loopholes. So that's all to say that while some fintech solutions may offset some of the issues that are currently going on right now, at the end of the day, the fintechs cannot function without a bank partner. So they can still be de-risked like that a lot quicker than banks can. So I feel like it doesn't really cure it. It might, kind of patchwork it to get us to that FBO or that clearing agency or something, some long-term solution. But most fintechs are, they cannot move money unless they have a bank partner and global bank partners. And they can still be de-risked very, very quickly, especially if you're working with US fintechs, which are, like I said, without AML oversight for the most part. So does that answer the question, you think?
It does. Because I'm going to come back to blockchain and other technologies, time permitting, because we're in the last 10 minutes. But Theresa, over to you. What are we seeing in terms of this eagerly anticipated report, both in terms of timeline or any other comments you can make in terms of next steps?
So I don't necessarily have a timeline, unfortunately.
That's fine.
Yeah, but the report is due to Congress, and so Congress will make the decision concerning whether to publish it. And that's something that Congress will have to decide.
I think that's great because one of the challenges we have in the region as well as I guess in the US is how do we make solutions that are sustainable and that can straddle political cycles, and how governments are able to have the legislators I'm not only talking about the US here, but also in the region, prioritize a lot of what Wendy has said, or even create the opportunities for a lot of what Sarah Beth has said, relies on us being able to have solutions that can straddle political cycles, where each successive government can say, this is super important to us. It doesn't matter the fact that I'm from a different party or that I may see things differently. If it's super important to us because of its humanitarian underpinnings, then we need to find a solution. We've gone through a number of solutions this afternoon. I'm very happy how we're coursing through them. And in the last few minutes that we have 5 minutes. I'm going to do it toward the tablet, but we'll also touch on a few others that you believe might be important. We touched on 4 or so various types of consolidation. We touched on the consortium, etc. I want to ask each of you to give an idea of what you think might be the important places to look or things to think about in the context of solutions to de-risking. I want to start with Theresa in understanding or underlining the importance of the work that you're doing, or sharing with us how you think that might impact the whole, solutions focus that at least we have on this panel in relation to de-risking, and any other thoughts you have about the critical work. I think what you're doing is super important, and that's why we really wanted to hear from Treasury this afternoon. Tell us what are your views in terms of that critical importance, etc.
So, as I stated before, I mean, we have been really working on this financial inclusion, and has been an important focal point as well as it relates to kind of assessing the various issues related to de-risking. So it's something that we are really focused on and continue to consider to be very important.
Thank you very much. Sarah Beth, I want to thank you a lot for your contributions this afternoon. You've been your usual self, at least the way I know you. Always fearless in terms of being able to articulate with great respect and restraint as well.
Yes.
your points. But is there anything else that's been rocking your bones, so to speak, that you believe from a solutions perspective our audience needs to hear? And if you can, to what extent you think it might be important, any commentary you have to the economic development of the region going forward, the importance of what you work on and what you do every day in terms of trying to ensure that the financial ecosystem in the region and the role that you play as an AML professional in ensuring that we have that system functioning clean and in an environment that's very hostile to money launderers, etc.
Yeah.
What are your final thoughts?
Well, at the end of the day, I really feel like an FBO, because it's regulated by the Federal Reserve, they can come in and examine it just like they would a Federal Reserve bank. I really feel like that's something that has legs. And it's not something that the Federal Reserve is going to just cut off, right? I mean, we have other FBOs from other parts of the world that are much higher risk that, get penalties when they don't do what they're supposed to do, but we know what we're supposed to do. So if we make that our focus, I feel like an FBO is going to be, kind of like the longer term solution to this. But I think, and part of what I tried to do over the last couple of years was play matchmaker, right, between community institutions in the U.S. that really do a good job at compliance, that have the right people in place, and that non-interest income from those respondent relationships means a heck of a lot more on that balance sheet than it does to a tier 1 and to a tier 2. And I feel like if the U.S. government or FinCEN or somebody, I don't know where it should sit, can come up with some type of incentive, maybe a rebate or something, right, that incentivizes community institutions that are doing the right thing already to step into this space and go, hey, why don't you take your AML skills, add, an additional person or two, and really go after this region. I feel like that would go a lot further. Profitability is not going to be as big of an issue because it's a smaller shop. You're not dealing with $1 trillion asset. You're dealing with a $2 to $5 billion asset institution in the U.S. So, and that's what I've tried to do over the years. I have several emails, probably on a weekly basis, from banks around the world saying, hey, do you know anybody? And then I connect them and hope it happens and all that kind of stuff. So I feel like there's some work there that it can be done as well. But I really think that the FBO is where I would put my money.
Thank you very much. I think that's critical. Both of the last two strong suggestions you made. The one about the community banks is what we call as a solution, from a solution perspective, establishing second and third tier CBRs, correspondent bank relationships. And I think so off of your primary, see what else you can do on with community banks for whom that, as you said, that fee income would be great. And I really want to thank you for that very sharp and insightful contribution. Wendy, I'd like to come to you. What are your final thoughts on where do we go with solutions and where you stand? I think the role that you're performing is, and what you say is really important to this audience, because you are based in the region, you're for the region, so you see the importance of us being able to tie our sustainable economic development to the full and efficient functioning of your members.
Yeah, Toussant, if I'm to be completely honest, there are no final thoughts when it comes to correspondent banking and de-risking because of its significance to our survival, right? And I can't say that enough. I do think, though, that this is not a singular focused issue. And so we do have to take a multi-pronged approach to determining what is the best solution going to be for the region. And what CAB has really done is work towards providing short-term vision, a mid and long-term views to how are we going to address this issue, simply because every time we think that we have addressed one potential threat or risk, something else pops up. And in that vein, what I would encourage our members to do and our region to do is to keep innovating and see all of these movements in terms of what we need to do differently as opportunities to continue to challenge ourselves to become the best banking system that there is. So, for example, now I remember earlier this year being in a setting and we were told, "Hey, why don't you guys focus on ESG as the way to get past this?" And I thought, right, are we really having this discussion? Like, where is ESG coming into the mix? But then, sometimes you do have to step back and think, what is best for me long term? And yes, perhaps ESG is one of those things that we now need to focus on, not necessarily only to address correspondent banking and de-risking, but as a means of strengthening us, who we are, and the services that we provide from a legacy perspective, right? So again, I think this is a multi-pronged approach, and we do have to challenge ourselves as well to become uncomfortable in the solutions that we may need to see as the way to dealing with this issue as a once and for all. I'll leave that as a hanging in the air because I think there's a lot more discussion to be had around it. But lots of positive discussion this afternoon. Certainly has been an honor to sit in with these lovely ladies as well.
Thank you so much. When we conceptualized this conference, it was the idea that whatever we discussed in each panel would go directly back to our understanding of how the region as a whole can achieve sustainable development. And I think a lot of what we've heard today on this panel, a lot of the insights that you've heard, audience, and I'm speaking to you directly, the audience, from these wonderful experts, the insights that they've shared, the opinions that they've shared, are great takeaways in understanding not only what's coming in the context of what Theresa shared, what's on tap, what's happening, but also what are the challenges we face in looking at solutions. There is no one size fits all. I think we can agree on a few things this afternoon. There's no one size fits all. There's no one single solution that can make the grade to be able to do it. There's no end to this conversation. These are not only my words. You've heard this through the members of the audience. There are solutions, however, that can have legs, as Sarah mentioned. And those are the ones that perhaps we can take as either the lower hanging fruit in terms of the funding and looking at how do we establish a single solution or two to begin start the ball rolling. But most importantly, what you've heard this afternoon is that there are many more questions than there are answers. And that's not always a bad thing if you can get to answering those questions in a way that is efficient and with the urgency that it demands if we consider this a humanitarian issue. I'd like to thank my stellar panelists, Wendy, Delmar, Theresa Ritter, and Beth Felix. I'd like to thank you, the audience, for joining us this afternoon. Those are your takeaways. That was our conversation. Have a great day and do enjoy the rest of the conference. All the very best.
Thank you.